Welcome to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can check out all of our terrific podcasts at americastalking.com. To support podcasts such as Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Friday, January 19th, and joining me is my friend and colleague, Dr. Orphe Divounguy. He's a PhD economist. The U.S. labor market is doing things that maybe we didn't think it would do, and that is actually providing employment for people. Jobless claims fell, and so it's the lowest reading since September. I'm stealing that verbiage directly off of the CNBC story that Jeff Cox wrote on Thursday the 18th. I want to get into this with you and kind of see if we can pull this apart. Again, let me steal some more data from Jeff Cox, since he was nice enough to bullet point this up for his story. It's CNBC. Initial filings for unemployment totaled 187,000 for the week that ended January 13th. That is the lowest level since September 24th, 2022. The total for continuing claims hit 1.806 million, and that is below the FactSet estimate of 1.83 million. So these jobs and this work, I mean, obviously we're thrilled that people are employed, and they're adding to the economy, and they're taking care of themselves, and they're steering away from the, requirements of public support. But we didn't think that this would be the case. What didn't we see coming?
Well, look, I think most economists thought the labor market would have to slow down significantly, and that the unemployment rate would have to increase in order for inflation to continue to come down. I think that was kind of the view, and maybe Larry Summers was leading that camp, I would say. Mm-hmm. But we're not seeing that, right? We're seeing I think we're seeing the expansion continue,
right?
Essentially, the labor market remains tight, and yet inflation has continued to come down. I mean, it's been a miracle. We brought inflation down from, and I'm looking at quoting the Consumer Price Index from 9%, almost 9% in June of 2022, down to 3.3%, something like that, the latest numbers. So, I mean, it's been fascinating to see inflation continue to decelerate with a tight labor market. I mean, the unemployment is like 3.7% right now.
So let me ask you this. Let me just ask you this question. This is an odd time, right? I mean, we rode through a pandemic that was debilitating to the economy, largely because of the policy changes, the policy positions that we took and the changes in the economy that reflected from those policy changes. We put a lot of people out of work. We wound up closing a lot of businesses in the name of saving people's lives. We could debate that probably for days, whether that was, that was right, wrong, or something in between. But the economy is coming back, and I think that maybe that this is an anomaly that we have never seen before in the reading of an economy. This post-pandemic movement forward is, I think I can only speak on behalf of myself. It is confusing. It does not seem to be following the pattern that I thought it might. It is not like the housing crisis from 2008. It does not look like the recession and the massive inflation that we had when I was a kid, caused by OPEC and oil changes or prices changes in oil pricing. That this is something very different. Do you have an opinion on sort of this in scope, looking back over the last now 4 years?
Well, look, I just have to go back to when you think about COVID, and you think about what happened after COVID. You had this massive inflation increase, And some people were surprised by that. And I happened to be one of those people that was not surprised by the increase in inflation.
Okay.
We had massive, look, in order to rescue the U.S. economy from the COVID-19 pandemic, the Fed had to step in. Interest rates had to drop. We got a ton of fiscal stimulus, which probably wasn't it was probably too much fiscal stimulus.
We agree on that.
And so as a result, interest rates dropped. People got mortgage rates that were 2 to 3%. So how could you possibly somehow decide? Anyone who wanted to buy a home went out and did so.
Yes, it was crazy. Right.
So, and we saw these types of excesses across the board. It wasn't just housing, and I shouldn't even call it an excess. There was a lot of pent up demand for housing. Look, we came into COVID with 15 years of underbuilding, families living sharing a house. Mm-hmm. Right. And then when they finally had the opportunity to move out on their own, they did. So I wouldn't even call this an excess in the housing market necessarily, but you saw excess in a lot of other places, right? We saw a lot of zombie companies being born. You saw, we talk about excess. How about we take those retail sales numbers? By the way, we're further along. Interest rates have increased. We're squeezed to the max. Consumer household debt is at a record high and rising. Corporate debt is also rising. Government debt is rising. And then you look at the U.S. economy is full of contradictions. And then you look at retail sales in December and this surprise on the upside. Like everybody went out and shopped. I mean, that's another thing that was completely unexpected, right? I know I changed the subject a little bit, but
No.
I cannot believe the retail sales number. If you compare retail sales number in the U.S., the strong increase that we saw in December, right? And you compare that to the headlines for other countries, slump in the UK, slump in Canada, right? The U.S. consumer, call them resilient or call them foolish. I don't know. I'm not sure what to call them these days. But at the end of the day, the year started off, December was unbelievable. Beating even what retailers, right? Usually too optimistic estimates of retailers were saying was going to happen.
Yeah.
So that's that. Of course, that U.S. consumer is supported by a strong labor market, right? We started with the labor market. And so maybe that's why the consumer's still out there spending. Some people might say, well, look, ultimately, consumers are going to spend if they've had a large increase in wealth, right? Which they've had, right? We had a massive increase and we still have some excess savings from, accumulated from the pandemic. We have rapid increase in stock market wealth. We had a huge increase in housing wealth, right? And so if you take all of that, it does make sense that the consumer is not saving as much and still spending so much, right? Mm-hmm. That's kind of what's going on with the U.S. economy. I guess the big question is, what happens if the labor market cools further or cools more than expected in the months to come? Then that might change everything. Now, of course, this has implications for Fed policy. If the consumer is still spending a ton, then perhaps we're not going to see as much disinflation as we were hoping to see. And that would, in turn, push yields higher, right? And bring an end to this party.
Yep. I appreciate your thoughts as always. And, to that point, in terms of layoffs, I just saw a bulletin. Wayfair is laying off a significant portion. The online retailer Wayfair, it looks like it's cutting about 10% or more of its staff just today. Yeah,
but you see, that's the part that I find really puzzling. I mean, we're getting mixed signals from. We have a lot of big companies laying off people, And yet you look at the data, and the unemployment rate is still just 3.7%. It's really, really low.
We'll pick this up as a future topic. We're going to call it good right there. Thanks as always, Dr. O, for Orphe Divounguy. This has been Chris Krug. Subscribe to Everyday Economics at americastalking.com.
Enjoying our podcast? Your reviews help other listeners find our show. Please leave us a review on Apple Podcast, Spotify, or wherever you listen.